Welcome traders. Today, we're diving into the fascinating world of fractals and how they can be utilized in intraday trading. Specifically, we'll discuss the Williams fractal and its variations. Jacob, let's kick things off with an overview of the Williams fractal.
Absolutely, Eric. The Williams fractal, named after its creator Larry Williams, is a powerful tool that helps us identify turning points in the market. It's based on the concept that markets exhibit recurring patterns, much like the fractals found in nature. These fractals highlight key price highs and lows, helping us spot potential trend reversals.
As you can see here on the whiteboard, the Williams fractal consists of a series of 5 consecutive bars. The middle bar has the highest high, HH, or lowest low, LL, flanked by 2 bars with lower highs, LH, and 2 bars with higher lows, HL. This arrangement signifies a potential trend change.
Exactly, Eric. Now, while the traditional Williams fractal is fantastic, there are other non-conventional variations that traders can consider. These variations use indicator plots like volatility, momentum, and inertia to identify fractal patterns. Let's dive into these 6 variations. Balance of market power. This variant uses the balance of market power indicator to identify shifts in market sentiment. Tick count. It's formed based on the number of ticks, helping us gauge intraday activity intensity. Triple EMA. Here, we use a triple exponential moving average to detect trend reversals. Momentum. This variation focuses on momentum indicators to highlight potential turning points. Volatility. It uses volatility indicators to identify fractal patterns during periods of high price fluctuation. Fisher transform. This variant leverages the Fisher transform indicator, which helps in normalizing price data for better trend identification.
These variations can provide unique insights into market dynamics, sometimes offering an edge over the traditional Williams fractal. But how do we test and evaluate the performance of these fractals?
Great question, Eric. To do that, we have the walk-forward AllGo trading tool from werner-tools.com. This tool conducts walk-forward tests, back tests, and live forward tests, giving us comprehensive data on profitability, win rates, and risk management.
The walk-forward test results are displayed in the walk-forward test label, the back test results are displayed in the back test label, and the forward test results are displayed in the forward test label. These test results include the percent profitability, win rate, break-even win rate, profit, loss, and the risk-to-reward ratio. The tool also provides instructional guidance, making it a valuable companion for traders seeking profitable opportunities. A down or up fractal is displayed prior to each trade execution. A green or red up or down arrow suggests a long or short trade. The large green or red label below the arrow suggests the share quantity, buy, limit, and stop prices. First, we will select the Williams fractal under Fractal Type in the Settings panel. We will measure the percent profitability, percent win rate, and the risk-to-reward ratio for the past 180 days through walk-forward testing, back testing, and forward testing. Next, we will repeat the above measurements with the balance of market power fractal. Next, we will repeat the above measurements with the tick count fractal. Next, we will repeat the above measurements with the triple EMA fractal. Next we will repeat the above measurements with the momentum fractal. Next we will repeat the above measurements with the volatility fractal. Next we will repeat the above measurements with the Fisher transform fractal.
Alright traders, let's delve deeper into the performance metrics we've gathered using the walk forward, back test, and forward test methods for these fractal variations. By comparing these metrics, we can gain valuable insights into their effectiveness. Let's start with the Williams fractal. In the walk forward scenario, we're seeing a slight loss of 1%. However, the win rate is at a decent 65%, and the risk-to-reward ratio stands at 3.3 to 1. Moving on to back testing, the profitability remains at break-even, but the win rate has improved to 73%, maintaining the same risk-to-reward ratio. In the forward test, we see a significant jump in profitability to 15%, but the risk-to-reward ratio levels out high at 4 to 1.
These numbers give us a baseline to compare against the other fractal variations. Let's move to the balance of market power fractal. The walk-forward profitability is 2%, with a win rate of 67% and a risk-to-reward ratio of 3.2 to 1. The back test and forward test maintain a profitability of 3% and 100%, respectively, and display strong win rates, but the risk-to-reward ratio increases slightly in the forward test.
Now, let's analyze the tick count fractal. In the walk-forward scenario, we're looking at a 3% profitability, a 66% win rate, and a risk-to-reward ratio of 3 to 1. The back test aligns with similar values. However, the forward test reveals a drop in profitability to -14%, despite a decent win rate of 64% and a risk-to-reward ratio of 2.4 to 1.
Moving on to the triple EMA fractal. The walk-forward profitability is at break-even, but we see a win rate of 67% and a risk-to-reward ratio of 3.2 to 1. Interestingly, the back test shows a slight loss of 1% and a similar risk-to-reward ratio. The forward test depicts a -4% profitability, a win rate of 71%, and a risk-to-reward ratio of 2.9 to 1.
Let's discuss the momentum fractal. The walk-forward profitability is 3%, with a 68% win rate and a risk-to-reward ratio of 3.2 to 1. The back test showcases a profitability of 2%, a win rate of 76%, and the same risk-to-reward ratio. In the forward test, we see a notable drop in profitability to -15%, coupled with a win rate of 60% and an elevated risk-to-reward ratio of 3.5 to 1.
Now, let's assess the volatility fractal. The walk-forward profitability is 1%, the win rate is 65%, and the risk-to-reward ratio is 2.9. The back test mirrors this pattern. However, the forward test presents a substantial decrease in profitability to -21%, a win rate of 67%, and a risk-to-reward ratio of 2.6 to 1.
Lastly, the Fisher transform fractal. The walk-forward profitability is 1%, with a win rate of 67% and a risk-to-reward ratio of 3.2 to 1. The back test reports a profitability of 2%, a win rate of 74%, and the same risk-to-reward ratio. Unfortunately, the forward test shows a significant decrease in profitability to -15%, with a win rate of 33% and a risk-to-reward ratio of 2.6 to 1.
These detailed performance metrics give us a clear picture of how each fractal variation performs across different testing scenarios. Now, let's briefly discuss the benefits of using these evaluation methods.
Absolutely, Eric. Walk forward, back testing, and forward testing provide traders with a holistic view of their strategy's effectiveness. Walk forward testing ensures our strategies adapt to changing market conditions by continuously optimizing parameters. Back testing validates historical performance, while forward testing simulates real-world trading conditions.
And, traders, remember that the choice of fractal can be highly dependent on market conditions. Certain variations might excel in specific scenarios. For instance, the balance of market power fractal showed a high win rate and profitability in the forward test, indicating its potential in certain market situations.
That's right, Eric. By analyzing these metrics and adapting to different market dynamics, traders can make informed decisions and tailor their strategies accordingly. The aim is to strike a balance between profitability, win rate, and risk-to-reward ratio.
And there you have it, folks. After analyzing the performance metrics and insights, we can see that each of these fractal variations provides a unique perspective on intraday trading scenarios. The tests reveal that some fractals have shown higher profitability with relatively lower win rates, while others have demonstrated consistent win rates with moderate profitability. Remember, the choice of the best-suited fractal variation depends on your trading strategy and risk tolerance. Happy trading! Successful trading is about finding the right tools and strategies that align with your trading style and market conditions. Remember, traders, while the traditional Williams fractal is a powerful tool, these non-conventional variations can offer alternative insights. It's essential to test and find the approach that aligns with your trading strategy.
To wrap up our discussion, we delved into the fascinating world of fractal variations and their applicability in intraday trading. We began by exploring the Williams fractal, a well-known concept in technical analysis. This classic fractal is formed using price chart highs and lows, offering insights into potential trend reversals.
Then, we ventured into the realm of non-conventional fractals, where we introduced 6 alternative variations created from indicators such as balance of market power, tick count, triple EMA, momentum, volatility, and Fisher transform. These unique fractals provided distinct perspectives, each catering to different aspects of the market dynamics.
We discussed how these variations can benefit intraday traders, sometimes outperforming the traditional Williams fractal in specific scenarios. However, we emphasized the importance of testing and evaluating these fractals rigorously to align with individual trading strategies and objectives.
We introduced the walk-forward AllGo trading tool as a valuable resource to assess the performance of these fractals. This versatile tool aids traders by conducting walk-forward tests, back tests, and forward tests, providing crucial data on profitability, win rates, and risk management.
Lastly, we compared the performance of these fractal variations using real-world data from Delta Airlines, DAL, in a 5-minute timeframe. By considering profitability, win rates, and risk-to-reward ratios, we demonstrated how the best-suited fractal can be determined based on these essential factors.
In conclusion, this discussion shed light on the diverse range of fractal variations available to intraday traders. By meticulously testing and analyzing their performance, traders can refine their strategies and adapt to ever-changing market conditions. Remember, no single fractal fits all scenarios, so finding the optimal match requires careful consideration of these factors. Happy trading, and may your strategies be as dynamic as the market itself.